Good morning, good afternoon, or good evening, depending on when you're watching. This is Brian Keith Noonan of the Crypto Dynamics Investment Club, and today we have a special presentation and Q&A with Elmer Howard, who is a cryptocurrency tax and accounting expert. This presentation is being put on in a joint effort between myself and my partner, Justin Rekla of the Clear Business Directory and CryptoVit Verified Due Diligence. Justin, are you there? I might have caught him off guard.
I am. I'm here. I'm here. Welcome. This is exciting stuff. You know, the cryptocurrency world is blowing up, and Brian, you and I have been talking about it for some time. As far as it's not a matter of if the government's going to find a way to tax it. It's going to be a matter of when. And guess what? They already have, and I'm super excited because Elmer is. One, he's fully vetted. He's been a part of my team for quite some time right now. He's been playing in the cryptocurrency world for some time with me as well. And he is staying on top of it. And I'm super excited that we're doing this right now because folks I know folks have concerns about what the tax implications are and how to track that properly. And some of the stuff that Elmer is going to go over today is super important because if you don't do it right, if you don't keep track of it and the government does find out about it, then those capital gains can be, can be very costly. It looks like Elmer just accidentally popped off, so I'm sure he'll be right back on. And so that's the information that he's going to share today is going to help keep you in the loop. Make sure you're staying ahead of it. There's some stuff that you can do on your own. Elmer specializes it, and he assists people with doing it for them. But more importantly, the information that he's going to share is going to keep you ahead of the game, so you don't get hit with huge tax penalties. So you don't end up going to jail because you were hiding assets. And so that's really what I'm super excited about the information it is. So give it 1 second. I think Elmer's going to hop right back on because it looks like he fell off. So Elmer, are you there?
Yeah, he's there.
There we go.
So just before Elmer starts, I'll just throw in my personal 2 cents on this. I'm all about paying as little taxes as I can, and there are some creative ways to do that with cryptocurrencies. That being said, there's a certain amount of transactions, especially if you're using U.S.-based exchanges like Coinbase and Gemini, that are going to be on the radar of the U.S., the IRS rather. The IRS just subpoenaed Coinbase for customer records, and they wanted all of them. And Coinbase was able to fight it and only give up the records of people that had $20,000 or more transactions in a given year. So they are coming, they're snooping. And so I'll post also to link to my group in case you're not in it, because I know some of you coming from the cryptocurrency due diligence group, and some of you will be coming from the Crypto Dynamics Club. We'll make sure both links are posted. They're both good groups to be in. And especially in my one-on-one crypto coaching, I get into ways for you to keep this stuff off the radar and be more anonymous. I'm going to let Elmer get into his presentation, and then we'll take questions after that. Or if there's something urgent, just unmute yourself and jump in. It's all yours, Elmer. Take it away.
Thank you, Brian.
Thank you.
Yeah. So, as Brian has mentioned about the IRS is coming down, they're even trying to do some ethical hacking to try to get people's wallet IDs and connect them to emails so they can track how much activity is happening. And I don't know if you mentioned this, the reason that they're doing that is because hundreds of thousands of people over the last few years have been using Bitcoin in the US, and only about 400 to 800 have claim that on their taxes. So the IRS knows there's a lot more people out there and a lot more money they're not getting. So they're definitely coming after Bitcoin and cryptocurrency users in general. In terms of the IRS, how they're treating cryptocurrencies, they're looking at it as a property, not as a currency. So it doesn't have the foreign exchange rates and such that you have to worry about. And because it is a property, you have to track the value, which is they call the fair market value, and when you purchase it and when you sell it, so that you can then have either a capital gain, a capital loss, and depending on how long you hold it, either a short-term gain or a long-term gain, which also determines the amount of tax you'll be paying on it. So if you were going to do this on your own, if you're going to track your property, the cryptocurrency as a property, you would probably need at least 3 different spreadsheets or 3 tabs inside of a spreadsheet, because you need to track all of your trades. You need to track your income if you're mining, and then you need to track your purchases and your sales. So you have the 3, and then you have a 4th one, which combines to figure out your long-term and short-term gain. You take the buys and apply the sales against them to figure that out. To figure out the fair market value, there's a few ways you can do this, and the IRS has said that it's on the day of the trade, so you don't have to worry about the second. It's cryptocurrency, especially Bitcoin, is going up and down every minute, so you don't have to worry about that when you get property, or either whether you purchase it through Coinbase or you make money through some mining operation, or someone else even pays you. Some businesses are able to accept Bitcoin payments now. You have a few options. You can choose the average price of the day. You could choose the price the second you receive it. You can choose the day's high, or you can choose the day's low. And this can be beneficial depending on what you're using it for. Because obviously, if I'm sending money to Brian, I'm going to want to have the day's high that I'm sending him more money, and Brian receives it. He's going to want to have the day's low because he doesn't want to pay much taxes on it.
Now, guys, I got to tell everybody on here, we do have a simplified solution for this coming that you can take advantage of, because if you feel the way I do about it, it's a nightmare. It's a total fucking nightmare to keep track of all this stuff. So Elmer does have there is light at the end of the tunnel here.
Yes. I was going to bring that up at the end, but yeah, we have some solutions for you in return in regards to this. And currently, the IRS isn't stating whether or not they're going to require you to use a consistent method when it comes to the fair market value. So for now, you can choose whatever's your best interest in terms of taxes on how you want to determine the fair market value of the cryptocurrency you receive. Now, in terms of short-term versus long-term gains, that depends on just how long you hold it. So, and then people think, well, it's just a year. Well, no, not technically. It's actually a year and a day. So if you bought something on October 20th of one year and sold it on October 20th of next year, you still have a short-term gain. You have to wait a year and a day before you actually sell it for it to be a long-term gain. And how the difference between those is a short-term gain is considered income and is taxed at whatever income tax bracket you're currently in, where long-term gains are considered capital tax gains, and depending on where you're at, that's usually around 15%, which is a lot lower than the highest income bracket, which is 35-38%. Now, when you're figuring out whether you have short-term or long-term gains, you have to figure out the inventory reporting method that you're going to use. Now, this one, you do whatever you choose. You have to consistently use that all the time for the property that you have. You can't jump back and forth between the options. The 2 simplest ones are, FIFO and LIFO, which is first in, first out, last in, first out. Now, in terms of doing wanting to get you to your long-term gains, I would suggest using your first in, first out, so that you're selling your oldest inventory, which helps get that long-term gain. Because if you're selling your newest inventory, you're always going to have short-term gain. I've been asked before about, I'm seeing something pop up on the screen, but I can't seem to get to there's the chat. Was there any questions?
I'll let you know if there are any questions, Elmer. This is just, we're making sure everybody has access to the resources of our groups and information about your accounting services and so forth. So that's what's
okay.
going on there. I'll let you know.
I want to make sure I wasn't missing Excel on my iPad. I only see a little pop-up. I don't see what's happening.
You're good to go, bud.
Thanks. So another question I get is on since this is property, can we use the 1031 exchange in terms of, moving between different cryptocurrencies? The thing is specifically the 1031 exchange, code on the Title 26 says that exchanges won't apply to property held primarily for sale. And most people are investing in cryptocurrencies are using it for sale. And, obviously this is probably going to get tested in court. And unless you want to be the guy paying the lawyers all their high exorbitant fees to test this in the court, I would suggest you don't try to use 1031 exchanges for your cryptocurrency. Also, there's been recently some tax attorneys have mentioned that with the recent events that the IRS have been taking, including going after Coinbase and such, they feel that that's an indication that the IRS is going to change their stance and it's not going to be a property anymore, and they're going to look at it as currency. And if that happens, obviously you can't use a 1031 exchange. But for now, I would just avoid it, even though it's still a property, just because it hasn't been tested in court and someone's going to have to do it at some point. If you're mining and if you're in a mining company that has commissions set up as like an MLM, this is treated as income. As soon as you receive the commission, receive the Bitcoin from the mining, you have to mark that as income using the fair market value of that day. And then you have to add it to your inventory using that same fair market value that you chose, so you can track it for your short-term and long-term gains. I know people have been asked, like, well, what if I'm not taking it out? You don't realize your short-term and long-term gains until you exchange it for another cryptocurrency, exchange it for goods or services, turn it into cash. But the income you have to realize immediately. It's not waiting until you exchange it's considered cash. It's considered income. So you definitely want to make sure you keep track of that. If you're paying for services, paying for employees, that is treated just like cash. So if you have an employee and you pay them in Bitcoin, you have to take care of the taxes just like you would if you were paying them cash. You got to also, if you're 1099 contractors and you pay them at least $600 a year, if it's in Bitcoin, you still have to give them the 1099 at the end of the year. And also, if they don't give you the W-9, you need to have backup tax withholding from that Bitcoin that you would be giving to them. So if you haven't been reporting your cryptocurrency dealings properly on your tax returns, you could face an audit, obviously, from the IRS. As Brian said, they recently went after Coinbase and won the case where anybody has at least $20,000 in a year that of transactions that they need to turn over, who it is and how much they were transacting. So you want to start properly recording your income now, and you want to amend any previous year's tax returns. And but currently the IRS can only audit back 3 years. However, there are special circumstances that can extend this time period. So if you had committed tax fraud, there is no limit. Again, there is no limit if they decide you committed tax fraud on how far back they can go and audit all of your tax returns. So this is not something you want to play around with in that aspect. On top of that, if they do decide that you committed tax fraud, which hiding money, not claiming money to avoid taxes is what's considered tax fraud. They have civil penalties, which include up to 75% of the owed tax. So, if you owe $10,000, you could owe $17,500 to the IRS. But more likely, because of how many people are hiding it, and the IRS is probably going to want to make examples of people. Anybody they audit in terms of cryptocurrency will probably be facing the criminal charges. And that for individual is a $100,000 fine and 5 years in federal prison. And if you're investing cryptocurrency as a business, you're looking at a $500,000 fine and still 5 years in federal prison. So I highly recommend that you talk to a tax attorney if you have past returns that you haven't claimed your cryptocurrency on. Make sure that you can get it taken care of and get it paid, and not going to be facing any criminal charges. Excuse me. Now, if you do have that issue, don't rely on your bookkeeper, your CPA, your accountant, or even an enrolled agent, because people like me, we're not attorneys. We don't have the attorney-client privilege. If Brian's my client and he tells me he's been hiding all this money, and then the IRS audits him, they can subpoena me to be a witness against him.
I thought you weren't going to say anything about that.
So I told Justin this, like, look, if you're going to do anything shady, just don't tell me about it. I don't want to know. Because we don't have that attorney-client privilege.
Full transparency on this end, baby. That's what we're all about. Full transparency.
Yes, exactly. We don't want to. The IRS is really coming down hard, and if they're able to hack, ethically hack, as they call it, ethically, into Coinbase or anybody else who has wallets and can find your wallet and attach it to you, they're going to audit you immediately. So, and it's
ethically
not.
hack. That's bullshit. Ethically hack.
Yeah. Yeah, it's the government though. It's gonna be harder to fight it because especially if they ethically hack you and then they prove you did something wrong, it's harder to say like, oh, they shouldn't have been doing that. It's probably something that might get challenged if they do successfully hack a system and get a wallet, because it's easy for them at that point to check if you had tax fraud, because they see your tax return, they see your wallet, and they can tell if you claimed it or not. So it'd be really simple for them to file charges. If that were the case. It's not like hiding cash or hiding money in other banks that they'd have to get the bank to release the information from. I was fast and I went through a lot of information. If there's questions, before we get to the questions, we'll go over the software as an option to handle all of this, to track your capital gains, track your income, and to track the worth. If you have an IRA, you can invest in Bitcoin. But you need to track the worth and the fair market value, because at the end of the year, you got to tell your custodian, what the fair market value of the property you're holding in your IRA is now.
Absolutely. So this guys is a simplified solution to keep track of all this stuff. And once again, we have a lot of conversations going on, especially in my group, which we're partnered up. So Justin has his group, I have my group, but we're all partnered up under the Clear Business Directory and due diligence umbrella, so to speak, so that we're all working together to help you to profit from cryptocurrency safely, securely, without getting in trouble with the IRS, and also to optimize your profits. So keep that in mind. We're kind of one big happy family here, and Elmer is our go-to guy for accounting. He has some software that can simplify all this, because if you're anything like me, my head starts spinning when I hear all those different options and things to keep track of and whatever. I'm not a paperwork person. I'll probably end up in jail if I don't use this software. So go ahead, Elmer.
Yeah, so the software is called Bitcoin Taxes. If you wanted to do it yourself, you could. It's $50 a month if you just make sure I have the right website. Oh, yeah, so it's bitcoin.tax. If you wanted to do it on your own and not have anybody else involved in this process, you can sign up for free. Free only gives you 100 transactions. So you'll have to upgrade, and that's $50 a month. If you wanted to go through me and not use my services, but you just wanted to get a discount, because I am an accountant and I have an accountant profile with Bitcoin Taxes, I can get it to you for $35 a month, which is a savings. If you want to pay me yearly for the software, I'll give it to you for $25 a month on a yearly basis. And so beyond that, if you want to also bring on my services, what we're doing is, and I got to find that because it's been.
Justin, is the page that you put in for Elmer's services, does that have that's the page with the software?
Absolutely. So it's clearbusinessdirectory.com/crypto accounting. And you can find all the information about the software, the discounts that Elmer's offering, as well as his his services. And if you if you choose to use his services to keep track of your crypto accounting, he even offers you a discount on the software at the same time. So you can find more information on that. We are using Elmer for our Bitcoin accounting because, like you, Brian, it makes my head want to explode, and I prefer to stay out of jail as well. And so that's why we're using Elmer, because he's on top of it. He's managing all of our stuff. And he's staying ahead of it all as well. So I don't have to worry about staying ahead of it, because this is his area of expertise.
Thank you. Yeah, I couldn't remember what I put up on there because we were doing it really late last night, as this was a new offering for me to come and give this talk. The page has all the explanations about from the website as well. If you go to BitTax, you'll see the the same information. It's about the software and how it works and what we can do in the countries that it currently supports. And he's constantly expanding this, so it'll be offering more services as time goes on.
Yeah, save some money, guys, and I mean, I think the software makes a lot of sense. If you agree, save some money and go through Elmer's link there. And what is it, like half? Is it half off or close to it?
35% if you're not using my services, and if you're paying monthly, it's $35 from the 50. It's half off if you want to pay yearly or if you're using some of my services.
Brilliant. Awesome. All right, so good stuff. Are you ready to take a couple questions?
Yep.
All right, so Aaron Merges Dallas asked a question in the chat, and I'm not entirely clear on it. So, Aaron, are you still there? Can you unmute yourself and go ahead and ask your question to Elmer, and you'll be able to clarify what you were saying.
Thanks, Brian. Yeah, can you hear me okay, Elmer?
Yep.
Hey, question for you. So if you're in a position where you're lending cryptocurrency on some platform, and you receive that amount back, let's just for simple terms call it 1 Bitcoin that you're lending.
Yep.
And you receive 2 Bitcoins back within that same year. It's interest income on the loan. So how does that apply?
Yeah, you would have to, that 1 extra Bitcoin would then be considered your interest income. And I don't know if his software currently, it tracks it as just income in software. So I don't know if you have to figure out, you're not using it as ordinary income, that you're doing it as interest income. If you're doing it just as only doing interest income, it won't be a problem because whatever's in the income for the software will be that interest income. If you're mixing it, if you're getting income from other places as well as interest, you're going to have to do a little more tracking to keep that separate so that you're not getting taxed as ordinary income if it's short-term gains.
So when does a cryptocurrency become a taxable event? Like if I'm trading something for another cryptocurrency between like Dash and Litecoin or Ethereum and Bitcoin, I haven't converted it to fiat currency. So when does it become a taxable event?
As soon as you exchange it, you'll have, because when you do the exchange, you'll have a capital gain or a capital loss at that time. You got to track that and mark that as your capital gain or loss as you move it into another currency, even if you're not moving it into a fiat. And then also income. As soon as you get income, that's also a taxable event immediately.
So is the IRS going to accept cryptocurrency payments for taxes now?
Not that I know of. I haven't heard about that yet.
No, but that sounds pretty crazy. I mean, so I haven't looked at your software yet, but if it can somehow, I mean, I don't even know how I would figure if I exchanged Bitcoin for Dash, how is there any gain or loss?
So when you're dealing with property and you're dealing with the cryptocurrency, so if you bought 1 Bitcoin and you paid $100 for it, and you think, well, let's say I only pull out.
I wish.
They're like, well, what if I only pull out $100? Do I have a tax consequence? And yes, you do, if it went up or if it went down. Now, if Bitcoin stayed at $100 when you put it in, you pulled it out when Bitcoin was $100, then there's no tax, there's no gain or loss. It's considered a wash sale. But if Bitcoin went up, let's say it doubled, and so you pull out $100, you're like, well, I just pulled out what I invested. Well, that's, logically you think that makes sense, but the problem is your Bitcoin, you only took out half a Bitcoin because you bought 1 Bitcoin $100, it's now worth 200. So you pulled out only half a Bitcoin. That half a Bitcoin you bought for $100 is now worth 200.
No, I get that part. But let's say we're exchanging for another cryptocurrency. How is there?
If so you bought $100 worth of Bitcoin and it's worth 200, you take that 200, it's now worth $200, you take that and buy Litecoin, let's say. Well, instead of buying $100 worth of Litecoin, it's now worth $200. So you have that $100 gain.
Right.
So you're buying Litecoin at whatever price it is, but it's you're buying more of it. So that's why you have the capital gain or capital loss when you exchange it.
I get it. Well, good. Thank God for the software if it tracks this, because I'm certainly not doing it. And
yes, it tracks all that. And I'm not sure they're determining the fair market value. I'm assuming it might be the average. I'll have to do more research to figure out what they're determining the fair market value as. But they figure that all out for you, and because basically it links into a ton of wallets and Coinbase, GDAX, and a bunch of others, and it sort of automatically pull your transactions in from those. Your income, you'll have to get a CSV file, like USI has a CSV file that you can download, and then you got to alter it a little bit to match the requirements for Bitcoin tax, and then you just upload it. And it has all your transactions there, and it does all the calculations on your short-term gain, long-term gain, income, and all that.
So the short-staffed and underfunded IRS is going to be able to track all these transactions between cryptocurrencies?
No, what they'll do is they'll just get your wallet, and then just they'll be able to figure out did you claim any Bitcoin gains or losses on your return? If you didn't, they're coming after you. So it's this really simple check for them to decide if they want to audit you. They're not going to audit everybody.
Well, that's because they lost the case with Coinbase. But what about other wallets?
Well, they're trying to ethically hack other wallets. Right now, yes, if you had a wallet that they don't know about, you could get away with it. But at some point down in the future, if they are able to figure it out, or that wallet company is required to turn it over, then you're looking at all the years of back taxes that you owe that you didn't take care of. And if you don't get it before the IRS does, you can be facing the criminal charges, which is individually, like I said, $100,000 and 5 years in prison. So it's just with how hard the IRS is going after it, I don't think it's worth it to hide it. And if you're making, if you made $100,000 off Bitcoin and it cost you $1,000, who cares if you got to pay $30,000 in taxes? You didn't do anything for that money. You just put it in something that happened to grow.
Well, they didn't either.
Yeah, that's a whole. We're not going to go down that road there, but I know a lot of us on here agree that the IRS is a bunch of criminals and taxation is theft. So
yeah, and absolutely. And without getting into any political discussions, the other thing I want to highlight is the fact that our infrastructure is still dependent on that. And if we start taking billions of dollars out of that infrastructure, it collapses. Then you've got nothing to use. So it is a balance at this point in time. It is a balance at this point in time, and how you manage your own taxes and what the income that you get from cryptocurrency is an individual decision. Our whole purpose of this is putting out information so you can make those decisions for yourself, and so you have the tools at your disposal so you can use them appropriately.
Absolutely. Stay on the right side of the law, guys. That's the main thing. And there are ways and wallets and ways to store cryptocurrency in terms of local wallets, hardware wallets, and things like that will not be on the radar of the IRS. But if what you did, if your transactions came through an exchange that is on the radar of the IRS, Coinbase / GDAX, Gemini, well, I would say especially the U.S.-based ones, but even perhaps some of the other ones, if they start widening that search, that could be an issue. So depending on how keen you are on keeping off that radar, you can talk to me more about that later. But yeah, if you're, believe me, anything that's going on a U.S.-based exchange is consider it to be known by the IRS. If not now, it will be, and act accordingly. All right, there was another question or two in my right now for anyone live here. Are there any questions? Steve, I saw that you unmuted yourself for a second there. Did you have a question? He's on the phone. All right. I'm just going to ask. Let's see how this question looks from the group here. All right, this is kind of broad, but let's see. So, and this may help clarify a couple things too. So, pardon me if it's repetitive. This is from a member of the group that couldn't be on a live call. So, first of all, are there any tax laws regarding cryptocurrency? Yes, there are. Okay, we covered that. If yes, right, taxation only applies when we sell, not when we buy or hold, right? Do we need to report anything on our tax forms even when we're only buying? I'm asking because governments are always losing tax dollars when we buy cryptos on foreign exchanges. So So can you recap that real quick for anybody that either wasn't paying attention, or didn't follow your initial part?
Yep. So IRS is treating cryptocurrencies as property, not as currency. And as property, you need to, when you buy it,
do a call with Frank and walk him through.
You need to immediately track the fair market value. You need to keep track of that, because if you exchange it, whether it's for fiat money or for another cryptocurrency, you do have a tax consequence at that point. You have a capital gain or capital loss. It can be short term or long term, depending on how long you held it. And so, yes, there are tax consequences immediately as soon as you start using cryptocurrency. If you also, I know Justin has his Shift card. Whenever he uses that Shift card, it is creating a capital gain or capital loss immediately for him.
Yeah.
And luckily, and it tracks, Coinbase is part of the system, so it tracks it for me. I don't have to worry about that. But it's, he didn't know about this, so he has a lot of short-term gains he's got to deal with. But he's running it as a business, so he does have business expenses that you can write off against it. So if you have the income coming in, whether it's from the capital gains or for short-term as a ordinary income or even mining income, if you're running it as a business, then your ordinary expenses in terms of running the business do reduce that income and do reduce your tax burden.
Absolutely. Well, so while I've been spending it to cover expenses, I will also be expensing it against our business.
Yeah. I mean, whole other conversation, guys. But if you don't have your own business, and you can do it as an employee, you can have a home-based business, something that eventually earns money and is more than just a hobby. You can expense and write off a lot of different things, and that's a whole other conversation. But if you don't have it, that's the greatest way to keep more of the money that you earn in your job. Okay, here's another question. So are we, the taxpayers, the ones responsible, or are the exchanges responsible for tracking these buy, sell, blah, 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 blah? And so are these exchanges required to send a report to the IRS? Do we get something sent to us, or what?
Currently, no, they're not required. Just like a 1099, if I 1099 Brian for a bunch of work and it was over $600, I'm required to send it to the IRS and give him a copy. And then that way he has that copy and knows what to claim as income from me on his tax return. I don't know if any of the mining companies are going to be doing that. The trading companies, again, I just don't think they're going to be doing that. They're not required to. And the IRS is going to say it's not their responsibility. That's why I'm saying, either get the software or get an Excel sheet and get good with it on tracking your property, the capital gains and losses, the income, all of that stuff, because it's going to be your responsibility. And the IRS doesn't care if you didn't know about it. If you really didn't know about it, they'll probably come after you just civilly, and you'll have this up to 75% fine. But you're still not going to just walk away with like, poor baby, you didn't know about it. Okay, go on your way. They're still going to slap you with tax, back taxes and fines on that as well.
Absolutely. Hey, I'm going to grab that software right after this call. I'm excited about that. Did anybody else on the live call? Thank you for that, Elmer. Did anybody else on the live call have a question? You want to unmute yourself and ask Elmer a question while we have him? We're going to be wrapping up pretty soon, but I'd like you all to be heard. Steve, I saw you unmuted yourself.
Yep, I got a question.
Oh, there. Okay, Alice, yes, go ahead.
Yeah, so I have my own business, and I'm basically a facilitator of a new cryptocurrency education platform that I'm putting together. Elmer will be on it, Justin, and I have two types of audiences. Yeah, I mean the education is lacking, so that's the role that I'm taking right now. I have sort of two types of audiences. One are young millennials that are just like making a lot of money on social media marketing and putting their money into Bitcoin on Coinbase. And they don't really care about paying their taxes. They don't know who to go to. They don't necessarily want to go to an accountant, but they want to go and read about it online, like what the IRS is doing, or talk to some public figures about it. They don't have a mentor, basically. That's my point. And the second audience is established professionals who are in their 50s and 60s, who have been doing one type of business their entire life, and they don't really understand digital assets. And so the question then becomes is how much time should they really spend learning? How much time should they actually, buy services that Elmer offers? I mean, at what point is it absolutely necessary that everybody has their own accountant or keeps up to date on this information? Because I can go ahead and sell my program with the information that I'll keep updating. But how do we encourage more people to really take it a lot more seriously because of the tax implications and the penalties that the government is imposing?
Thank you for your question, Alice. Yeah, what I find, and Justin can attest to this, being also in the personal growth and development field, that a lot of times people won't change until there's been a pain. And I think what'll happen is when the news starts reporting of all these small cryptocurrency investors, like them, just the average day Joe, is going to prison for 5 years and facing $100,000 penalty, people might at that point start taking it seriously. To try to get them to do that before that happens is just to impress upon them. If they have the software and they're using it and they're able to get the reports and give it to their CPA, so he can, or their tax accountant, so they can get their taxes done, then they don't need my services. As long as they understand the software, or if they're doing it on spreadsheets, if they're really good at spreadsheets and like math and like figuring out formulas in spreadsheets, and they can keep track of it, and they don't need services of somebody. But if they're not tracking it and they don't want to learn how to track it, then at that point, that's when they need to hire someone to do it for them.
And I'm of the opinion too that there's a lot that goes into it. And if you're heavily involved in the cryptocurrency world, buying, trading, selling, mining, and so forth, my opinion is that your time is better served creating the money, creating the opportunities, running your business, whatnot, and let somebody like Elmer, whose business is solely keeping you safe or protected, doing it, because you're going to spend so much more time trying to figure out how to make it all work and keep yourself safe from the IRS, to where that's what Elmer does 24/7, is that's his expertise. And so really, I think it comes down to how much time do you want to spend learning Bitcoin accounting as opposed to having somebody like Elmer do it for you.
And I just want to add one little caveat to that. If you told me somebody had $10,000, they're putting it in Bitcoin and they're not going to touch it for 5 years, they probably don't need me. They just need to make sure they keep track of the fair market value, how much they put in, and until they sell it, they're after at that point they're not going to have another tax consequence. So that's the one avenue of, like, they might not need to hire somebody, is if they bought it and they're going to hold it for 5 years before they do anything with it.
Yeah, that's kind of what I was getting from that question is, so, when are the numbers compelling enough for someone to make that extra effort to track all the cryptocurrency? Because some people are just dabbling. They may have a couple thousand here or there or whatever. And some of us might have hundreds of thousands that are going on. And, where is the line between the dabbler and some serious income and capital gains where, we definitely would want to be on it? I would say err on the side of caution, guys. Even if you only have a few thousand going on, at least take what you learned today on this call and apply it. But it gets very complicated. The fair market value when you got it versus when you either used it or exchanged it or what have you. It gets pretty tricky, man. It's hairy. So I'm really glad to have Elmer on our team to help basically uncomplicate this, especially with that software he has. All right. Anybody else have any more questions before we wrap up? Thank you all. By the way, Alice, good job on. I think you're on track with the educational programs. We do a lot of that in our groups. I hope you're in my group as well as Justin's, and you can take things out of there and bring them to your programs and to your people and stuff like that. So good stuff.
Thanks. Yeah, I've been watching you guys. So good stuff. It's cross education, cross referencing, and it's just how many people can we reach more with our education?
Absolutely. All right. Going once, going twice.
I got a couple questions.
More questions. Okay. Who's that?
This is Aaron.
Hey, Zach.
It's Aaron.
Aaron.
So which bodies are which governing bodies are regulating this? Is this the CFTC? Is that the ones that are setting the regulations and rules for all these crypto exchanges?
So I have some notes here. I just if I can find them. They actually different regulations, different regulatory bodies have come out with different regulations on how they're looking at it, and there is no consensus between it. In terms of taxes, it's all the IRS stuff. I know that the other agencies are also, in terms of like, if you're a merchant service, there's an agency that's regulating that on how you're taking in money. If you're exchanging money for Bitcoin for the public, there's another organization that's regulating that. There's even the investment world, they're coming out and saying that this is a very high risk. They're kind of regulating themselves about whether or not people can offer it to in their brokerage firms. So yeah, each one has a different take on it, and depending on which industry you're looking into, depends on who's going to be regulating it. And there's now.
Yeah, and to add to that, the SEC's even throwing their hat into the game because of the ICO world. So
Wow.
if you're getting involved in ICOs, matter of fact, I just posted an article in the due diligence group about the SEO. The SEC this week on Monday just shut down a very large ICO that was a scam. So there's a lot of fraud and scam in the ICO world right now, but there's a lot of money to be made. So the SEC is throwing it in a turn. Right now, the SEC is talking about regulating ICOs just like an initial public offering because it is literally like the Wild Wild West out there right now. So my advice to you on that is if you're getting involved in the ICO world and you're looking at making some money through an ICO, make sure you do your due diligence on that ICO company because it is extremely high risk. And know that there's additional regulations coming down from the SEC here in the very near future.
And I found my notes. So a few of the things, the organizations, the regulatory bodies that I know about and what they're doing, FinCEN, which is the U.S. Financial Criminal Enforcement Network, they put out guidance in March 2013. They're looking at money services business, the MSB. It's that if you're exchanging money for consumers, then they're putting you under the BSA, which is the Bank Secrecy Act of 1970. The Currency and Foreign Transactions Reporting Act, the Anti-Money Laundering Act. The 10,000 plus is to trigger the report if you're doing that from, if you're exchanging it. If you hit the 10,000, you still have to report it. That trigger applies for Bitcoin and cryptocurrencies as well as cash. Suspicious activity report if you're exchanging and you just have, if you think that this money is being used illegally or to fund illegal activities, you have to report it. So there's a lot just from the FinCEN. Obviously, we know the IRS, what they put out in March of 2014. Recently, well, I guess not recently, it was in July of 2014, a lot of people are kind of watching what's happening here. It's the New York Department of Finance. They are, the New York bit license is something they're looking at. It's they're looking at whether or not political committees can accept Bitcoin, whether or not the industry regulations, Bitcoin is more than a bit risky from them. It's not FDA insured, so just remember that. If you have $200,000 in the bank and the bank gets robbed, you're insured. Just like that hack that happened a couple days ago, where $64 million was stolen from wallets. If you had money in there, it's not. There's no insurance on it.
That was actually stolen from a company, not from people's wallets. From we're talking about NiceHash.
Yes.
And this is a really good point, guys. First of all, it's essential that we have our own personal security protocols set up properly for our cryptocurrencies, with all the two-factor authentication and passphrases and private keys in a safe place. Like a safe. I spilled a drink on my just as an example, you spill a drink on your desk and your recovery passphrase could get wiped out. Mine didn't, but I was thinking about that. I have a safe, so I keep my hardware wallet in a safe when I'm not using it. I keep my passphrase in a safe, like a physical safe, fireproof, everything, like with your important documents. If you don't have that already, you should, because you have important documents. Even before cryptocurrency, you have important shit to protect. So nobody wants to think of a worst case scenario like your house burning down, but it happens. So that robberies happen, kids, pets, dogs, whatever, it all happens, and you can lose out and not be able to access your funds, and that would really suck. And that happens all the time. They're estimating something like between $4 and $7 million. No, rather, between 4 and 7 million Bitcoin that have been already mined, so that are supposed to be in circulation, are lost forever. People, erased their hard drive, lost their private key, destroyed the device, threw it out, whatever. And that is really, that's horror stories. So don't be that guy. I have a lot of information in my group about securing your assets. That's the Crypto Dynamics link. But what I want to say is, any online website, an exchange, or an online wallet like Coinbase, or any company that you have an account with that you may be making money from, don't leave that money in there. Okay, take it out, put it in a local wallet like Jax.io, or a Ledger Nano, like one of these deals, which is basically a glorified hard drive, but it's got a little screen on it. I don't know why it's not lighting up. So get it set up properly. If set up properly, these are your these are your lines of defense. So your wallet's not going to get hacked. All right, if that's set up properly, you're not going to get personally hacked. But Elmer's talking about the IRS ethically hacking. Like, I think they're working on exchange accounts. They're working on Coinbase. They're working on Gemini. They're working on whatever different exchanges or different companies. They might be working on USI Tech or BitClub or whatever the case is. So those things are not only vulnerable to the IRS. And I hate the ethical hacking term because I fucking hate them. But it's also vulnerable to hackers, right? So hackers, they're hacking exchanges. They're hacking big exchanges, and they're hacking these different companies. So there's one side of your personal security measures, and then there's the websites that you depend on their security measures, and I don't trust them. I never save a credit card on the website. I never put personal information in if I don't have to. Those things, because I don't trust them, and the hackers are smart. So if you have stuff on accounts, like, leave the minimum amount that you need on an exchange for trading and what have you, or if it's in a wallet that's like an online wallet that's attached to a debit card or what have you, just leave the minimum amount on there. Don't leave the majority of your funds there. I'm going to put a couple of links in the chat real quick for a local wallet that I like the best. It has a desktop and a phone app option. That's Jax. And then I think we're getting wrapped up here. So take these links, any ones that you want from the chat. Sorry, before we wrap up.
I've got one final question for you, Elmer, if you don't mind. And I appreciate you sharing your knowledge with us today. It's really good to get this education. Let's say, hypothetically, my brother wants to give me a couple $1,000s to buy some Bitcoin. It's not my money. It's his. He wants to send it to me. I buy the Bitcoin, then I send it to him. How do you recommend I track that properly?
Dude, don't do that. Don't do that. I did that as a favor to some people somewhere in the past year. They wanted to buy into either our mining shares or they wanted to get Bitcoin. They didn't, have an account or whatever. And I had a PayPal account shut down for that activity and lost money. And it's not good. It ends up being, I think, probably considered money laundering. What do you say, Elmer?
It's, you can treat it as a loan. If your brother is giving you the cash, if you just look at it from the cash perspective and you're like, okay, he gave me $1,000, it's a loan that I'm going to pay him back on. The only downside is tracking that, but also like the income. If you're not running it through a business, then it's harder to prove that, you had expenses with it, that you were trying, then giving it back to him. And, is he doing it because he just doesn't want to set up the wallet, doesn't want to go through the process?
Well, the problem is, Coinbase has been overloaded, and it's when you sign up for a new account, you can only do like $250 a week, which is nothing. And I can do like $10,000 a week. So he wanted to put some money in it and doesn't want to wait 3 months to be able to get anything substantial. So he's like, hey, I'll just deposit the money in your bank account. You buy it and then send it to my wallet.
Recently, I had that same situation actually happen to me. I couldn't get enough because of my limits on Coinbase. And so I actually had Justin buy packages for me, and I sent him the cash for it. and that worked out only because I already have a USI account. So I'm able to track in the software, that I received this. It's, considered income. So I received this as income from my perspective. Justin, receives the income from me in terms of cash in, US dollars, and then he expenses it out that, he sent me those packages. So he's able to track it as, it came in and went out the same. It's a wash for him. And because I have my own USI account, then it gets properly transferred into my name. So that way it's clear in terms of, the tax purposes and keeping track of it, who owns it. If you're buying it in your own packages and you're keeping it there, the IRS is going to claim it's yours, even if you use your brother's money, because it's in your name. And so if he has a USI account and you want to put Bitcoin in to buy him some USI packages, let's just say that's possible, because you're then transferring it back into his name. And other than that, though, it gets a little tricky.
And that's why I use Elmer to keep track of all of this.
Right on. Thank you, Elmer.
God bless Elmer. Yeah, that's it just, to me, people get excited. They want to get on. Sometimes the exchanges are busy. For me, I have at least 3 different exchange accounts set up so I can get on one of them, set up and funded so I can get on at least one of them, even during heavy trading, and get what I want for the price I want when I want it. So these are things that are all considerations in your cryptocurrency world, sort of like the technology can fail. When prices are going way up or way down, Coinbase fails. It shuts down. Usually the mobile app will be a little better than the desktop website, but nevertheless, you might not be able to make that trade. So same with GDAX, although they're a little bit more robust. It's the same company, so if you have a Coinbase account, you have a GDAX account. You don't have to make a new account. You can log in with the same username and password, and that's the best place to buy and sell for much lower or even no fees if you do that right. All that information is in my group, and I know some of it overlaps with Justin's and vice versa. So make sure you're in both groups and paying attention. Ask questions. We're here for you. We've always had a very before even Justin and I decided to partner up on this. I've had a very high emphasis on due diligence and vetting things, making sure that the ICOs and the coins and any other ancillary opportunities that we recommend are legit. And so our integrity is on the line. If we put our name on and give it our blessing, then it's a safe thing for you to do. We fact check all our information and make sure that we're not like if you're in any other cryptocurrency related groups on Facebook or most other ones, they're total shit. I mean, all there are people throwing around affiliate links and saying buy my shit and trying to get you into the latest Ponzi scam. Our groups are not like that.
Pay your taxes.
What's that?
Or telling you not to pay your taxes.
Or tell you not to pay your taxes.
Yeah.
Yeah. So anyways, this has been a great call, Elmer. Thank you so much. Thank you, everybody who showed up live. We're going to wrap it up here.
Brian, I just want to expand a little more on Aaron's question as I was thinking about it while you were talking.
Yeah.
If his brother has a Bitcoin wallet and Aaron's taking the cash in and moving the Bitcoin from his account into his brother's Bitcoin wallet, that would be okay as long as the tracking, they track it well, because then again, he's transferring the property into his brother's name. Now you might have a little more of a tax consequence if he's not doing it through the business, because he's got to prove that Bitcoin wasn't a gift to him, that he actually gave the cash and exchanged cash for it. Otherwise it would count as income as well, on top of getting it as property. So there's ways of handling it as long as the property is transferred into someone else's name.
I think in my rant about things, I got off topic though. What I was going to say is it's usually better to wait and walk someone through getting their own account than funneling the money through you. Even if they're excited and they're whatever impatient, just let them take the couple of days it takes to get verified on their own exchange account, and then steer clear of it, because it just keeps your accounting that much cleaner.
Yeah.
All right, guys. Awesome. Thank you so much. Have a great weekend. I'll be putting the recording of this up in both groups here in the next probably couple hours after it processes and uploads to YouTube. And all these links and everything, they are in our groups. I'll also add any of the ones that I put into our chat here so that you can refer back to them. And that's about it from me. Justin, you have anything?
Nope, I think that's it. Just again, we're going to be putting out this information as it continues to evolve, and it'll continue to evolve
Every day.
Every day we're gonna be staying ahead of this. Elmer is on top of it, and he's literally our go-to resource right now for this. You can read up on Elmer inside the Clear Business Directory as well. He has been fully vetted by our firm, so you can take a look at him there. The tools, again, I just posted it in our due diligence group. Take a look there. If anybody has any questions, hit us up in the group, and any concerns, or connect with Elmer directly, because it is evolving fast, and you want to make sure you stay ahead of it.
Yeah, I'm just going to go grab Elmer's software right now, so I'm excited.
Perfect. Good stuff.
All right. Thanks, Elmer. Thanks, everybody. See you soon.